Well, welcome.
How you doing?
Good. It's good to see you.
Nice to see you too, in another country.
Yeah. So you tell us where you've been roughly over the last 3 weeks.
I'm not quite sure. I think this is the 8th or 9th city in the last 2.5 weeks, but Middle East, Hong Kong, back to the Middle East, Dublin, Madrid, and here.
Why'd you go back? You forget something?
Yeah, exactly. I left a comb in someplace in Dubai. I had to go back and get it. So just been spending a lot of time over here. We're on the road sort of raising our new fund and meeting some of the team members in different places and occasionally talking to a bunch of nerds. Hi.
I saw a really big bag in the back. Is that full of money or something from the Middle East?
I killed somebody in Hong Kong and traveled them
good.
back. I get a bounty.
Oh, good. That's new revenue stream.
Exactly. We're always looking.
Okay, so you travel to dozens of countries. You've taken 25 red eyes this year. You've spoken at 100 events. What type of drugs are you on, and how do you get them through British Customs?
Yeah, actually, I'm trying to figure out if they're legal.
Local dealers in every city.
Or not, but
the Tinder for
hopefully
drugs.
we'll get to the point where all the drugs that I'm taking are legal in most of the places I'm going. But
just avoid the dogs, right? Always avoid the dogs. VC funding for startups has dropped 25% in the first quarter of 2016.
Whatever.
I spoke to a very prominent firm, a general partner at a firm recently who said that in 2014 in the first two quarters they did 12 investments. Last year they did 8. This year they've done 1. What say you?
How
do you feel?
I think they should probably get their shit together because I think they're leaving a lot of opportunities on the table. Who is that? Seriously? Do they want to publicly admit that they're like stopping investing in startups? Why the fuck do they exist? Like, oh, we're a VC firm and we've decided to stop doing investing because so few people are using the internet. Really? I hadn't noticed that people stopped buying shit online lately.
Well, so are you saying that you've invested in just as many startups this year as you did last year and the year before in the same period?
We're on pace to probably do more. We did about 500, maybe 500 or 600 last year. We'll probably do at least that many this year. I mean, the only reason I would say to not do investments in this climate is because you think valuations are too high. And if you're correct that there's been a pullback in the market, then you would sort of guess that the valuations are lower, and you would be more inclined to do investment, not less.
You don't think everybody's clinched?
Unless VCs are sheep.
You don't think people have clinched? I mean, you would know this way better than I would, but everyone I talk to in the Valley, that's a VC. I don't know about necessarily like very, very early stage or doing international investments may be different, but like VCs are all, I don't know, everyone I've talked to is like, we're going to wait and see what happens. And they're doing some investments, but
that's bullshit. They're just talking the market to their advantage. I think, a bunch of people have raised funds in Q1.
Sure.
People raised like billion-dollar funds in Q1. So
I think they're just getting the fees right
now. The LP environment is certainly still open to investing in VCs. If the funding environment is down 25%, that still means we're up over probably the last 2 or 3 years. I mean, there's still billions of dollars being deployed into the market.
Evaluations for the seed
This
stage.
is all a bullshit story by the fucking press to like say, oh, the sky is falling. Like, yes, valuations go up and down and the amount of capital goes up and down, but do you think there are less people online building less companies, buying less shit than last year? You're fucking insane. Like, why do you think Amazon and Apple and Google and Facebook are so fucking dominant? Because everybody has a goddamn smartphone in their hands. In fact, they got 2 of them, and they're buying shit. So, like, what is the press's problem? Oh, sky is falling. No, prices might be too high. Innovation is not dead. In fact, it's rising. In Europe, there are way more seed funds and other capital available than ever before. If we want to talk ourselves into depression, sure, we can do that, but that's a fucking bullshit story. Right, if the rest of the market wants to talk down valuation so I can invest at 20% lower prices, shit, yeah, I'm psyched about that. Sorry for you guys, but it's awesome for me. But like, really? Do you think there's less opportunity this year than last year, than the year before, than the year before, than the year before? You're fucked in the head.
You're saying that generally you're not targeting that at me, or are you targeting that at me?
No, you're beautiful this morning.
Thank you.
Very, very pretty bald head.
It's shaved, but
Yes,
whatever.
exactly.
Has the requirement for traction changed? Have the applications changed that you've been seeing? What do you require now? I mean, what gets you excited when a company applies?
I mean, same thing as always. We look for product that's functional, early customer usage.
How many? Well, give us some numbers.
$10,000 to $50,000 a month in revenue probably is a
10 to
sweet
50
spot.
or 15?
10 to 50.
50, yeah.
$1,000
Okay, yeah.
US. But
Yeah.
sometimes it's not revenue based. So maybe a couple of enterprise pilots, maybe a couple 100,000 users if there's no
Consumer
revenue.
thing or something, yeah.
Yeah, but I mean, we're trying to identify when people are obviously buying shit or using your shit before, I don't know, before you're at a Series A level, before you're at $1 million in revenue. But we want to see that you've got a product out the door and that you have customers. If you come up to me and say, hey, I've got a really great idea, I'm like, fuck you, I don't care. It's just like there's lots of people with smart ideas, but getting...
Can that person still take a selfie with you? Or
Yes, of course.
Yeah,
I would
good.
still do that.
Okay, cool.
But I don't want to hear about your idea. I want to hear what customers think about your products.
Yeah.
And show me some evidence.
What's the hardest part of running 500 startups?
Raising money, keeping track of everybody across 20 different countries.
When you go to raise money, do you wear shoes?
Yeah, probably. I probably do.
I think you're meeting with the Prime Minister tonight. Are you gonna wear Angry Birds? Or are you gonna
Will they let me in with flip-flops?
Do you have an Angry Birds bow tie? Were they gonna let you in?
Yeah, probably not with a shirt that has Arabic on it, but maybe. I don't know. I think I would probably wear flip-flops if they won't turn me away, but I don't know.
Those look like jean sweatpants. Are those real jeans, or are those like jeans that... Can I
They're
feel
like
them?
some skinny pants shit.
I think they're like sweatpants, like really nice sweatpants.
Fuck you, man. Come on. Don't bust me on stage.
It's awesome. Okay, let's get back to this.
We can talk about some serious shit.
There's all sorts of names you just call me. I can say something about sweatpants. Okay, what part of building 500 was easier than you expected?
Building the brand. Actually, the brand and the differentiation was really easy. I mean, a lot of it was we were looking at how do we differentiate from other traditional VC firms in the Valley? How do we differentiate from Y Combinator and Techstars that are doing accelerators? And a lot of that was pretty simple. Generally, the strategy is don't have a stick up your ass, and you can easily differentiate yourself from most of the rest of the Valley.
Well, it seems like you started with. I mean, it's amazing how far those slide shares in those talks that you started with, like the kind of the genesis of your
Most of it was startup metrics for pirates, and then a couple of other talks about how to do a pitch deck.
People are still talking about that talk. I mean, I had somebody this week mention that, like, oh, you should check out this our talk by Dave McClure. I'm like, the one from 2001, and it's like, I mean, but it resonated. People, I mean, it was different. It was new, right? And it's kind of
It's a simple idea and mostly just one picture. And other folks, I think, have taken that much further now. I think Ash Maurya and Eric Ries and a bunch of other people, probably have more thoughts on that topic. But it was simple. And I think that's what was resonated. But, I mean, in addition to social media and other education, the initial thesis we had was just making a large number of investments would result in better investment returns. And from the data that we've gotten so far from Fund 1 and Fund 2, that looks very much on target. So,
do you have enough capital to then stick with the best bets? Like, you're in, I think you've had, I don't know, how many exits have you had? 24 or something? I mean, you've had so many exits.
Yeah, but meaningful. Well, so we probably had, I don't know, maybe 50 to 100 exits, probably 50 that are positive exits, and probably eight that are meaningful from a capital perspective. Okay. And that sort of mirrors the overall portfolio. I think, we take for granted that probably half our investments will go to zero or not return capital. Maybe we might make a little bit of money on 20 to 30%, but really most of our economic return comes from less than 10% of portfolio, and really, probably 2% turn into the unicorn 50x story, and maybe 5% turn into sort of 20x, $100 million story. What I'm probably most proud of is the fact that we've got over 20 companies in our first fund, over about 265 companies, 20 that are worth more than 100 million, and 3 that are worth more than $500 million. But I don't brag or worry about the unicorns. I think we're trying to get a distribution of outcomes that are, modestly positive.
Do you think at some point in the near future that the early stage model will change more into the favor of entrepreneurs? I don't mean valuations. I mean like real fundamental change. Like does it not seem funny to you that like I invest $25,000 in a company like Uber and it ends up turning into $40 million? Does that not seem like it's like the greatest
rare
wealth? It is rare, but should there not be caps on some of those things? Is there not a point where we say like, hey, look, I got 100x return on my investment. I'm good, or like, here's the value that I brought to the table. Like, is it?
I would probably prefer not to deal with income inequality that way. What I might suggest is it may not make sense for VCs to be comprised of money that's not coming from the entrepreneurial community. Like, I feel like, a future version of 500 is probably that we're just collecting money from previous entrepreneurs and other people in our community and using that to invest back into them. So I think with YC to some extent and maybe a few other funds, having community-driven LPs and investors seems like where we're headed. And so I don't, although there will still be a place for raising money from, external individuals and, institutions, more and more the small fund, I think you can probably raise from your own community. And so why not let more people share in the success of Uber rather than sort of putting a cap or limit on the folks that make a return?
It was recently reported that 45% of the Silicon Valley show HBO character Erlich Bachman, who's the founder of the Hacker Hostel, was actually you. How accurate,
or Sean Parker, but
how accurate is the 45% of?
I don't have as much hair as Erlich Bachman, and I don't smoke as much dope, but I'll leave that one.
It's legal in California, so. Is it legal?
I'm flattered, but Dick Costello hasn't given me a call to go on the show yet. And my own reality TV show was unfortunately canceled after one episode aired.
What did you learn from that?
Oh, Jesus.
Too many things?
Don't spend 2 years.
Don't spend time on TV.
Don't spend too much fucking time on TV. Like startups, TV shows fail.
Yeah. Yeah. What screws up European startups? Are there specific things that hurt people here more than other places?
I don't think that startup entrepreneurs are really that different from place to place. I mean, I think there's cultural differences, there's experience and mentorship differences, but I still think there's smart people everywhere. What's different is there's not capital everywhere. That's changed pretty dramatically, at least in London, in the last 3, 4, 5 years. So I feel like the environment here is a lot healthier than it was just 5 years ago. I think when Seed Camp was getting started, Saul Klein and Reshma and other folks had to work really hard to kind of build up a lot of the ecosystem here, and other VCs were helping with that. But now you're seeing a lot more folks, Passion Capital and others, White Star, that are doing seed fund work here. And I think that's what really has made a difference. You've had a few larger exits from European and British companies, and I think that provides mentorship and experience. But there's never been a lack of talent, either in London or in the EU overall.
Will you always be in Silicon Valley? Is it a non-negotiable?
I think we'll have a very large presence in Silicon Valley. About half of our team is in Mountain View and San Francisco, but the other half is spread across 20 countries and 5 other continents. And I would say that in another couple of years, we hope to be in 50 to 100 tech metros around the world. We're certainly investing in over 50 countries so far, and about a third of our capital has been invested outside the US. Some of those companies summarily come to Silicon Valley or come to the US. So I don't think that Silicon Valley has lost any of its luster or any of, it is a very special place. There's really amazing people that come there. It's a great environment to build a startup, except for the cost structure. But I think there's a lot of other places that are also becoming, relevant and interesting, and London is certainly one of them. Berlin is probably another. So is Dubai, so is Bangalore, so is Beijing, so is Sao Paulo. There's a lot of places around the world now that have critical mass. And it's really sort of more, again, on the investor side that I think is the challenge. Building the investor ecosystem and getting 5 to 10 sort of seed funds off the ground in a lot of geographies, it's what's really required. The investor community tends to complain about the talent level of the entrepreneurs, they're mostly full of shit. It's usually the investors that are weak links in those ecosystems, not the entrepreneurs.
When entrepreneurs international entrepreneurs come to Silicon Valley and say, hey, can you introduce me to investors that would invest in my startup? I can immediately basically eliminate everyone, except
It's
for
tough.
a very few people.
I mean,
and I wonder, most of them, what they say is they, if they're being honest, they say like, we have so much here to worry about, we can't even think about these other places. And so, do the returns justify the work for
us?
for your investors? Yeah.
Yeah, I mean, I think our early...
It's a lot of work.
It's certainly a lot of work, and it doesn't pay off right away.
Yeah.
I mean, our portfolio right now, I would say the international investments are performing better, at least on an IRR basis, than U.S. investments. Our accelerator investments are performing better than the seed investments. But still, a good half of our portfolio is seed deals in the U.S., primarily concentrated in Silicon Valley. What I think is interesting is the Southeast Asia portfolio and the Latin America portfolio are looking like 30% IRRs, which is a little bit better than our overall average performance. And there's less competition in a lot of those markets. So I think the potential in the international markets is really amazing, but it takes 3 to 5 years worth of work and development and patience for them to get off the ground. So people questioning why we're doing the international, it's not because of what's happening now, it's because of what's going to happen in 5 years and in 10 years.
And we have 200 chapters around the world, and you are the #1 person that people ask us to try to connect them with.
You should tell them to aim higher.
But it's a credit to you, and like you get on a plane, you work harder than, compared to VCs, harder than any VC that I know, and harder than basically any entrepreneur that I know as well. But like you do really, really hard and not really sexy work to get around and build the brand. And the other thing I like about 500, and 500 has been a partner of ours. I mean, the first time I met Dave was like in 2012, and you told me that in the middle of the interview that this interview was really effing boring. And I started sweating, and when you don't have hair and you start sweating, it's really embarrassing, even more than just sweating normally with hair. So I've never forgotten it, and I never will.
I think you generally do great interviews.
And I feel a little bit better now that I got you on the sweatpants, that I kind of we're sort of even now. But the thing I love about 500 is that you guys are accessible. And it doesn't mean that like everybody's getting in. Like you're not. Like you just said, like forget it. Like you got to hit the requirements. But I can go through the mentor network. If you don't think you can find the way to get into 500 startups, you are really incompetent. Because there are so many paths.
The main point is just like, don't hit me up. Like there's
no, it's not you. No,
30
that's the
other
dumbest
people
thing
in
to
the
do.
company that can make investment decisions, and there's hundreds of people who can make the intro.
That's right.
I'm actually not doing as many investments now. I'm sort of more on the fundraising side and working with our micro fund managers to help them with problems. So I'm tending to try and let the investment decisions be made by the rest of the company.
Right. Let's give it up for Dave McClure. Thanks for being here, man. Appreciate it.